Welcome to the deep dive. Today we're gonna be dissecting Cadence Design Systems.
CDNS.
CDNS. There we go.
That's it.
You got it.
Yeah,
A company you might not know by name, but whose tech is probably in your pocket right now.
probably.
I mean, look around us. It's everywhere.
It's everywhere.
So you've given us a stack of reports, articles, and analyst opinions. A lot to go through here.
A lot of information.
But
Yeah.
we're going to take this mountain of information and turn it into
Actionable advice.
actionable advice. There we go.
That's it.
For investors.
For investors, exactly. We want to give you the insights to make an informed decision,
Love that.
not just give you facts.
Not just facts. Yeah.
Yeah.
Okay, so for anyone just tuning in, Cadence Design Systems, what's their deal? What do they actually do?
So they're a giant in electronic design automation, or ED.
ED?
ED, that's right.
Right.
Think of them as the tool makers for the chip industry.
Hmm.
So their software and hardware helps engineers create those incredibly complex integrated circuits that power everything from smartphones to self-driving cars.
Okay, so they're essential to the whole semiconductor world.
Absolutely.
And their latest report, record backlog of $6.8 billion.
Huge.
That screams success, right?
It does.
It really does.
It does. And their Q4 2024 and full year results were stellar. Really good. Revenue's up. Demand is strong, especially for their AI-driven solutions. And, they have these really close relationships with industry giants like NVIDIA and leading foundries.
Mhm.
They're deeply embedded in their customers' design processes.
But here's where I got puzzled.
Okay.
With that backlog, you'd expect explosive growth projections, but for 2025, things seem a bit well tame.
Yeah, I think that's a key insight right there, connecting those dots.
Yeah.
So while their projected revenue increase of around 11% to roughly $5.1 billion is good, it's less than that mountain of backlogged orders might suggest. And a lot of these reports keep mentioning China market uncertainty, almost like a warning.
Ah, so that's the catch.
Yeah.
What's the China's situation all about?
So China is a huge E market for Cadence, but there are a lot of fears of a slowdown.
Oh.
And when you think about it, macroeconomic factors, export control regulations impacting what tech can be sold there,
Right.
it's a big unknown.
It's a big question mark.
Yeah.
So even with all those orders, they're baking in this China risk,
Exactly.
hence the conservative growth estimates.
I think that's a really good point.
Okay, it makes sense.
Yeah,
But if China is the potential downside,
right.
what's the big opportunity that has analysts buzzing?
Yeah, so the AI super cycle,
Okay.
this isn't hype.
Right.
This is a fundamental shift.
Got it.
And Cadence is perfectly positioned to benefit from this AI boom.
Yeah.
Their tools are already helping to design faster, more efficient chips, which are critical for AI advancement.
Okay, so they're not just riding the AI wave, they're practically building the surfboards.
Yes, exactly.
That's a great analogy.
I like that.
But let's talk about what the analysts are saying.
Okay.
Because our sources have a whole table of ratings, and
Okay.
it's all over the map.
Yeah, well, that's the market for you, right?
Right.
Some are very bullish on Cadence, especially given their AI prospects.
Mhm.
Others are more cautious, pointing to China and the overall macroeconomic headwinds. It's this classic case of weighing potential versus risk.
So how do BBE,
Yeah.
meaning our listener trying to make sense of this,
Right.
cut through all the noise, what stood out to you as the most important factor beyond the headlines?
Well, I think what's fascinating is this concept of Cadence's wide economic moat.
Oh, I love that.
It's a term Warren Buffett uses to describe a business's competitive advantage.
Okay.
So Cadence's products are so deeply ingrained in their customers' workflows that it would be very difficult and very expensive for those customers to switch to a competitor.
Hold on.
Yeah,
Explain that moat thing a bit more, because that sounds like they've got some serious defenses built up.
exactly. Think of a moat around a castle.
I gotcha.
It's hard to attack.
Hard to penetrate.
And for Cadence, high switching costs are part of it.
Okay.
Their customers are locked into their ecosystem, especially with solutions like Cerebrus, Semi, and Allegro X AI,
and Allegro X AI
all working together.
working together. Yeah.
And then there's the network effect. The more users their AI tools get,
Right.
the more valuable the whole system becomes, attracting even more users.
Right.
Powerful cycle.
Powerful cycle.
Yeah.
So even with risks like China, Cadence isn't easily toppled.
I think that's a really good point.
Yeah.
Not easily toppled.
That's got to be reassuring for investors.
It is.
But there's a lot more to unpack.
Oh, yeah.
Their financials tell a compelling story, too.
Absolutely. We can dive into that.
Perfect. And that's exactly where we'll pick up in part 2. So don't touch that dial. We'll be right back to dive deeper into the numbers and what they mean for you.
All right, we're back and ready to tackle Cadence's financials. I know numbers can be a little bit intimidating.
A little dry.
A little dry, yeah.
Yeah.
But they really hold the key to understanding
Yeah, they do.
a company's health and potential, right?
Yeah, absolutely. And, Cadence's numbers tell a pretty compelling story.
Okay, they do.
Let's start with something that caught my eye. Their gross margin.
Okay.
It's been consistently above 85%
Wow.
for the past few years. That's got to be good.
That is fantastic.
Yeah.
Gross margin is essentially how efficiently a company converts revenue into profit after paying for the direct costs of making their products or services.
So the higher the margin,
The better,
the better.
the more money they get to keep.
So Cadence keeping over 85 cents of every dollar earned
That's right.
after production costs.
Yeah.
That's a sign of strength.
It is. It suggests they have excellent cost control
Okay.
and pricing power. Remember that wide moat we were talking about?
Yeah, the moat.
The moat,
Mhm.
a high gross margin, is a direct result of that competitive advantage. They can demand a premium for their products
Because they're that good.
because it's that good.
It all ties together.
It does.
I love it when it all connects like that.
Yeah.
What about their operating margin? What does that tell us?
Okay, so operating margin, that factors in operating expenses. Things like salaries, rent, marketing, basically the cost of running the business every single day.
Day-to-day.
Cadence, they sit comfortably around 30 to 35%.
Okay, so not as high as their gross margin, but
Right.
still pretty impressive, right?
Definitely. I mean, it means they're not just making money, they're managing their operations very efficiently
Okay,
and turning a good chunk of revenue into actual profit.
right.
High gross A&D operating margins
Yeah.
are very strong signals to investors.
Okay, so zooming out from the specifics,
Okay.
what's the overall financial picture for Cadence? Like, how would you sum that up?
I would say they have a track record of consistent profitability,
Okay.
steady revenue growth, and strong cash flow.
Mm-hmm.
Their balance sheet is very healthy, low debt, plenty of cash on hand, and that gives them the flexibility to invest in future growth,
Future growth? Okay.
whether it's R&D, acquisitions like their recent move to buy Secure IC, or even expanding into new markets.
They're not just sitting on their laurels, they're actively playing offense.
Exactly.
I like that.
Yeah,
And they're buying back their own stock, too.
they are.
That's usually a good sign, isn't it?
It can be. It often signals that management believes their stock is undervalued.
Right.
They're basically betting on themselves.
Yeah, I like that.
Yeah.
Betting on themselves.
Mhm.
Okay, so we've got strong performance,
Yeah,
a unique competitive edge, the moat,
that's right.
solid financials.
Mm-hmm.
It seems like the stars are aligning for Cadence, but where do you see them headed in the next few years? What's your take?
I think it's a very dynamic situation, right?
Yeah.
There are definitely some challenges,
Sure.
especially with that looming China uncertainty, but I think they're well equipped to navigate those challenges.
Okay.
Their core business is robust, their financials are very healthy, and they have a clear vision for the future.
And a big part of that future hinges on their ability to ride the AI wave, right?
Absolutely. Cadence is incredibly well positioned to benefit from the continued AI boom. I mean, their AI-driven design tools are already a hit with customers, and they're investing really heavily in R&D to stay ahead of the curve. Solutions like Cadence Cerebrus,
That's the reason.
SimAI, and Allegro X AI.
That's a mouthful.
Yeah, lots of AI solutions there.
It's not just about AI, though, is it? I mean, they're diversifying into other areas as well.
Exactly. They're exploring these new markets, things like life sciences,
Wow.
which is a completely different ballgame,
Yeah,
but could add another layer of growth and stability to their portfolio.
that makes sense.
Yeah, and semiconductor industry is constantly evolving.
Sure.
Cadence is at the forefront of that evolution.
They're not a one-trick pony.
They're not.
That's for sure.
Not at all.
But with all these moving parts, what are the key takeaways for our listeners trying to make sense of Cadence?
I think there are three big things to keep in mind.
Okay, let's break those down. What's the first one?
Okay, so number one, Cadence is a dominant player in a high-growth market. They've got that wide economic moat, a strong track record of profitability, and a really rock-solid financial position. For investors, this makes them a very attractive prospect.
That's a compelling argument.
Yeah.
What's the second takeaway?
The second one, Their future growth is very tightly linked to the AI revolution.
Okay.
If they can continue to innovate and capitalize on the rise of AI, I think there's significant upside potential. And this is where those specialized AI-driven design tools and their dominance in hardware emulation really come into play.
So keeping an eye on their AI advancements is crucial. What's the third key takeaway?
Don't ignore the risks.
The risk.
The China situation is a big question mark.
Big question mark.
And the global economic climate is always a factor. So investors need to weigh these risks against the potential rewards.
It's all about balancing risk and reward, a classic investment dilemma.
Classic.
But we're not done yet. We've got one more part to this deep dive.
That's right.
And it's all about answering your burning questions.
Yes.
About Cadence Design Systems.
That's right.
We'll be tackling things like valuation, competition, what to watch for in their upcoming earnings reports.
Yes. We'll cover all that.
Plus, we'll wrap up with some final thoughts and food for thought as you continue your own research.
Exactly.
So stick around. It's about to get even more insightful. Welcome back to the final part of our deep dive into Cadence Design Systems. We've covered a lot of ground, from their position in the AI revolution to their impressive financials. But now it's time to tackle those burning questions investors always have.
Let's do it.
Okay, first up, valuation. How do we know if a stock like CDNS is overpriced, a bargain, or somewhere in between?
Yeah, so there are a lot of different valuation metrics out there. But I think one of the most popular is the price-to-earnings ratio.
The PE ratio.
Or PE ratio, for short.
Right, the PE ratio. It's one of those terms everyone throws around. Sometimes it's good to get a refresher. What does it actually tell us?
It basically compares a company's stock price to its earnings per share.
Okay.
So a high PE ratio could mean that investors are willing to pay a premium for each dollar of earnings, potentially, because they expect strong growth in the future.
So what's Cadence's PE ratio looking like right now?
Yeah, so it's currently hovering around 60.
60. That seems pretty high, doesn't it?
Yeah, it's definitely on the higher end compared to the overall market. But I think context is key here.
Right.
High growth companies, especially in a rapidly evolving space like AI, often command a premium. Investors are getting on future potential, not just current performance.
So not an immediate red flag, but something to dig into deeper.
Exactly.
What else should we be looking at besides the PE ratio?
I would say don't rely on just one metric. Look at things like the price-to-sales ratio, the press-to-book ratio, free cash flow, yield. These all help paint a more complete picture.
Okay.
And crucially, compare these metrics to Cadence's competitors.
Right.
Like Synopsys and Siemens EDA to see how they stack up. It's all about relative value.
Great point. It's not a vacuum.
Yeah.
Speaking of competition, how does Cadence differentiate itself in this three-horse race? What makes them stand out?
Well, I think their aggressive push into AI-driven design tools is a key differentiator. You know, they're helping customers design faster, more efficient chips, which are essential for AI advancements. Solutions like Cerebrus Semi and Allegro X AI are giving them a real edge.
So innovation is their weapon of choice.
It is.
What about new markets? We touched on life sciences earlier. Is that a serious play for them?
Absolutely. Expanding into fields like life sciences, I think, is a smart move for diversification and long-term growth. It shows they're not afraid to kind of push boundaries and leverage their expertise in new areas.
So they're playing offense on multiple fronts. Let's talk about their upcoming earnings reports. What should investors be paying close attention to? What are the key signals?
I would say keep a close eye on their revenue growth.
Okay.
Can they maintain that double-digit pace, especially with the China uncertainty?
Right.
You know, their ability to keep exceeding expectations will be a major factor for investors.
Right. That China situation, it's a wild card for sure. What else should we be watching?
Margins, margins, margins. Can they keep those gross and operating margins at those impressive levels?
Yeah.
It speaks to their efficiency and pricing power.
And lastly, any advice on reading between the lines of those reports?
Yeah, I would say pay attention to their guidance. What are their own predictions for the future?
Right.
Are they optimistic, cautious, or somewhere in between? Management's tone can reveal a lot about their confidence in their outlook.
It's like reading tea leaves, but with financial statements.
Yeah.
Okay, we've covered a ton of ground here, from the nitty-gritty of financials to the big picture trends shaping the industry. Any final thoughts for our listeners as they do their own due diligence on Cadence?
I think the biggest takeaway is that Cadence is at this really fascinating crossroads. They're a leader in a booming market, but they're not without their challenges. It's crucial to really weigh those risks against their strengths and make informed decisions.
Perfectly said. Remember, this deep dive was designed to give you a head start, not a finish line.
Mm.
Do your own research, consider your own risk tolerance, and make the investment choices that are right for you.
Exactly. And if you found this deep dive insightful, we have a whole library of episodes just like this covering a wide range of companies and industries. Make sure to subscribe to our channel and hit that bell icon so you never miss an episode.
We're passionate about bringing you in-depth analysis and helping you navigate this complex world of investing. So join us on this journey of knowledge and discovery, and until next time, happy investing.